Investing is one of the most powerful tools for building wealth over time. While it might seem intimidating at first, understanding the basics can help you start confidently. Here's a beginner-friendly guide to get you on the path to financial growth. 1. Why invest? Investing allows your money to grow through the power of compounding. Unlike saving, where money sits idle in a bank account, investing puts your money to work. Beat inflation. Inflation reduces the value of money over time. Investments like stocks or real estate can outpace inflation. Achieve financial goals. Whether it's buying a home, funding education, or retiring comfortably, investing helps you reach milestones faster. 2. Understand risk and reward. Every investment comes with a level of risk, but higher risks often lead to higher potential rewards. Low-risk options, savings accounts, government bonds, and certificates of deposit, CDs, are stable but offer modest returns. Moderate risk options, mutual funds, index funds, and ETFs spread risk by diversifying investments across multiple assets. High-risk options, individual stocks and cryptocurrencies can provide significant returns but are more volatile. Choose investments based on your risk tolerance, which depends on your financial goals and timeline. 3. Start small, stay consistent. You don't need a fortune to start investing. Small, consistent contributions can lead to big results over time. Start with $50 or $100. Many platforms allow you to begin with minimal amounts. Automate contributions. Set up automatic transfers to your investment accounts to ensure regular contributions. Take advantage of employer plans. Contribute to a 401k or similar plan, especially if your employer matches contributions. 4. Learn the types of investments. Understanding the common types of investments can help you decide where to put your money. Stocks. Partial ownership in a company. Potential for high returns but with more risk. Bonds. Loans to governments or corporations. Offer steady returns with lower risk. Real estate. Investing in property can provide passive income and long-term growth. ETFs and mutual funds. Pooled investments that diversify your portfolio, making them ideal for beginners. 5. Build a diversified portfolio. Diversification reduces risk by spreading your investments across different assets. Avoid putting all eggs in one basket. Combine stocks, bonds, and other assets. Rebalance periodically. Adjust your portfolio to maintain your desired level of risk as market conditions change. 6. Choose the right investment platform. Beginner-friendly platforms make it easy to start investing. Robo-advisors. Automated platforms that manage your portfolio based on your goals. Apps. Many apps, like Robinhood or Acorns, are designed for new investors. Traditional brokerages. Offer more in-depth tools and resources for those ready to learn more. 7. Think long-term. Investing isn't about quick wins, it's about building wealth over time. Stay patient. Markets can be volatile, but staying invested is key to success. Leverage compounding. Reinvest your returns to grow your investments faster. Avoid emotional decisions. Stick to your strategy, even during market downturns. 8. Educate yourself. The more you know, the better your investment decisions will be. Read books. Start with beginner-friendly guides like The Intelligent Investor. Follow reputable sources. Stay updated on market trends and economic news. Take courses. Many online platforms offer free or low-cost investment courses. Investing is a journey, not a race. Starting early, staying consistent, and diversifying your investments will set you up for long-term success. Don't wait for the perfect time to begin. The sooner you start, the sooner you'll see your wealth grow. Take that first step today.